The webinar today is on the Home Health Agency Medicare Cost Report, Form CMS 172894, and I thank Healthcare Synergy for hosting. Now, I first fell in love with the Medicare Cost Report in 1977, which was a smaller form, but I've been in love with the form and the cost report ever since. Spent 12 years auditing the form, and now the last 27 years I've been helping agencies and healthcare providers prepare the cost reports. One of the things we're going to talk about is the cost report is not a standalone document. Along with the cost report, when you submit it, you're going to be submitting other documents, and you're also going to be submitting the CMS Form 339 Provider Cost Report Questionnaire. We're going to discuss the purpose and filing process, the other documents that are involved, and why is cost reporting so important? Well, the obvious answer you're going to think about is if you don't file the thing, you're going to be on 100% Medicare withhold. But there's other issues also. The issue of compliance. You have to file the cost report. It's a Medicare requirement, if you're Medicare certified, of course. And you have to follow all these rules. Now, these rules, or reimbursement rules for Medicare cost reports, go back to the 1980s and the 1990s. They have not been changed. They're still on the books. There's a lot of you can and you can't, as you would expect dealing with the government. And cost reporting has gotten sloppy, which leads to other problems, including the possibility of fraud. And there's been people prosecuted for cost report fraud. Though granted, most of those are cost reports that were 2002 and prior, but that's still a possibility, particularly for certain states on the Medicaid programs. Now, we'll take the moment here to give my only commercial, I hope, is I don't care if you outsource the cost report or you do it in-house, but at least get preparation. The government says it takes 226 hours to collect and prepare the data needed for the cost report. Now, a good billing system like Healthcare Synergy will cut down the time. The Medicare PSNR will help there, and the use of QuickBooks or a similar usable accounting system and a good chart of accounts will cut down the time, but the CMS estimate is 226 hours. So you need to be attending webinars, conferences, offered not only by myself but others, or outsourced to experienced firm and Medicare cost reports. Now, the big to-do about cost reports is currently it is used for rebasing the rates. Your payment rate for the 4 years 2014 and after, right now we're in the midst of it, is based on the Medicare cost reports from 2011. So the sins of the past will visit us now, and the sins of the cost report now will be used for 2018 and thereafter. So it behooves everybody to prepare a good cost report. Why, directly to each of us, it does not have a direct effect. It affects us all in the community of cost reports. Another way of looking at it is when I took my granddaughter swimming, I told them two things I asked of them. One, that they don't kill their sister, and two, they don't pee in the pool. Well, that's asking everybody here. When you do a cost report, you're affecting the water we're all swimming in, you're affecting the rates of everybody. Now, they used the 2011 cost reports. Only about 60% of those cost reports were usable, since there was a lot of bad data in those reports. Now, what's also interesting is they did a sample audit of 100 cost reports from 2010, and CMS said the costs were overstated by 8%. Some of that, admittedly, providers got a little sloppy. If you use a credit card for expenses and don't separate personal and business expenses and document it, that's considered a non-allowable cost. But what I find more interesting is that 8 agencies were turned over to ZPICs, Zonal Program Integrity Contractors, which are tasked with finding Medicare fraud. So think about this. 8 of 100 cost reports had something in them significant enough that the reviewer turned them over for investigation of Medicare fraud. So it gets back to the issue of filing and compliance. Marketing costs, for example, is allowable cost in the sense that it's not illegal, but still needs to be removed from the cost report. That in itself would have not have generated a turnover to ZPIC, But for example, there were 1,000 cost reports that had no lupus. Maybe that was the subject of the inquiry. There were cost reports that were virtually all outliers. Maybe that was the subject for the inquiry. Maybe there were referral fees for medical directors that were viewed as excessive. That's not only could be non-allowable, but could potentially be illegal. So the cost reports are being scrutinized from CMS and the MACs for a number of different reasons. You need to be aware of that. Having given you the gloom part, let's give you the growth part. For home health reimbursement for Medicare, the last couple of years has been flat and actually has declined, which is interesting given the number and the growth of agencies and the aging population. 10,000 new Medicare beneficiaries are added to the rolls of Medicare every day. We're getting more than 4 million beneficiaries added. So it's a growing population, that's a growing patient population, that's a growing need for your services. The leveling off or decrease in services the last couple of years, I think, could be directly attributable to the increase in documents of face-to-face and the ADRs that have resulted. But you are in a growth industry. 1 in 6 people are covered by Medicare. They have a number of health issues, as the slide points out. And only 9% utilize home health services. So that also could be increased. So the Medicare cost report is not just a compliance document, though it is that, but it's also a tool that will help give you a lot of management information, your direct and indirect costs by discipline, fixed and variable cost, your non-routine medical supplies, and we're going to be talking about that and giving you some examples of that too. Now, the Medicare administrative contractors, or the people you file the cost report with, if you don't know who your MAC is, here's a nice color-coordinated map to show you who you belong to. Like here in California, most of us are with national government services, but depending on what part of the country you are is where you would send your cost report, assuming the cost report is not more than 12 or 13 years. There are a few agencies that would have been grandfathered in with CGS had they filed the cost report prior to 2004, I believe, but that's getting to be increasingly rare. Here's the MAC websites. Now, why do I give you the MAC websites? They all have listservs. You should sign up for listserv for your MAC because the government at least is trying to keep you informed. You need to know what they're saying and when they say it and what they're going to do. They also have various trainings from webinars. Okay. Can somebody put that on mute, please? If someone's typing, could they kindly stop? I haven't seen a typewriter in so long, I don't know what that noise would be. You should sign up for the listservs. You should be aware of educational offerings they're offering, explaining such things. Examples, what they consider needed for clinical documentation. And occasionally check out their website and see what's happening. Now, who files a Medicare cost report for home health agencies? If you're Medicare certified, you will file a report. Just a question of what type of report. If you're a home health agency that's hospital-based, the hospital is going to include you in their cost report, and you really don't have as much to worry about it. If you're freestanding, and most home health agencies are, then you will file a standalone HHA cost report. The aspects that are important, first of all, of course, is the deadline. If you're a December 31st home health agency cost report, you have to file it by May 31st, or you will be on Medicare withhold. Now, I'm a strong advocate for filing early as possible, which leads to the second reason, rejection. Occasionally, cost reports get rejected. They've been rejected because the ECR disk was flawed. They've been rejected because the MAC said they didn't get it, even though UPS and FedEx said they did. They've been rejected because the provider didn't sign the cost report encryption page. They've been rejected because the two cost reports were sent in one same package, and the MAC said they only got one of the two. There's a number of reasons they can be rejected, and granted, it only happens about 1 out of 100 times, but when it happens to you, it's rather critical. Because if it happens to you after May 31st that they reject your cost report, you're on 100% withhold while you figure out what went wrong and submit another cost report. If it happens to you before, say, May 10th, then you could possibly get the rejection notice and you have time to submit the correct cost report prior to being on withhold, which would start on June 1st. So it behooves you to try to file as early as you can. So we're strong advocates that you should file in March or April if you can do so. You will file an encrypted disk which contains the cost report. Now this gets interesting. So a couple of the MACs have gone to electronic filing, and we're not in favor of that. We're not advocates of it, and we don't recommend it. The reason being is you still have to send in the signature pages. You now have to worry about the electronic system, their email, coordinating with the signature page, and that it's all being accepted. Therefore, we recommend that you continue to file with the ECR disk and send it along with your pages. When you send Federal Express or UPS, of course, do read receipt, so you know they have it. It seems to be a safer, surer way than filing electronically and then sending the signatures. You need to use CMS-approved software. Software is lovely in the fact that it foots and it cross-foots, but more importantly, it really directs how you get from one page to the next, because it will issue edit messages if things don't flow properly. And of course, you need to sign. You'll sign the cost report and you'll sign the 339. We recommend you use blue ink, if not red, because it needs to stand out. We've had a cost report rejected because the signature looks so much like a copy of that page that the MAC assumed that it was a copy and not original signature. Be careful of titles, because the signature is going to be signed by an officer. We had a cost report rejected because the Secretary of the Board of Directors signed it and indicated that she was the secretary, and the MAC assumed she was the office secretary. Medicaid, if your cost report is used, and not in California, Medi-Cal doesn't have this issue, but if your cost report is used in any way to set your Medicaid rates or for a Medicaid cost reimbursement, it's even more important that you file in compliance with all the Medicare rules and regulations. Because while Medicare maybe not bother to pursue you for Medicare fraud, Medicaid fraud, it can be just as damaging. So if you're in North Carolina, Mississippi, Georgia, Indiana, Iowa, Idaho, somebody's missing. There's like 7 or 9 states that the Medicaid program is cost reimbursed. Their rates are set by either the Medicare cost report or their own cost report, or they use the cost report to set rates to a certain extent. So be conscious of the fact if you're participating in your state Medicaid program on how they reimburse for the Medicaid. And of course, the Provider Statistical and Reimbursement Report is the Medicare summary, which you can run to get your Medicare data, or in fact, you could use your software. Healthcare Synergy produces a nice report for that purpose. There's the list of approved software companies. One time in the 90s, we had over 20. Now we're down to 5, possibly because of all the changes with the prospective payment system. Cost reports are filed annually, consistent with your fiscal period, but not necessarily. You can have a different Medicare period. You sometimes see this where you have acquisitions or new startups that won't quite match. You select your cost report period. It could be anywhere from 1 to 13 months. So if you're a new agency or you're acquiring an agency, bear in mind it can't be more than 13 months. It can't be less than 1 month. The MACs have gotten in the habit of assuming everybody wants December 31 as the year end. If that is not the case, you need to advise them of that. Now, if you do less than $200,000 in Medicare, you could file a low Medicare utilization cost report, which is also called short form. It's a little simpler, easier to do, cheaper to do. But that $200,000 is locked in gold, iron, whatever you want to call it, and it's based on your Medicare payments received for services that were provided during the fiscal period. It doesn't matter when the payment was received if it relates to that period. If you did absolutely no Medicare business, zero, niche, none, then you could file an NMU, and that would be simply a letter disclosing the fact. But one patient, one visit, one LUPA, whatever, will cause you to have to file an LMU. Medicare for the cost report is on the accrual basis of accounting. This is the only time, unless you're a hospice and PIP, this is the only time that you're going to need to be on the accrual basis of accounting for Medicare. You can be on cash basis for your budget. You can be on cash basis for when the surveyors show up for your budget and your accounting, your general ledger, however you maintain it. But for the cost report, you have to be on the accrual basis of accounting. This is aside from the regs. So the revenue is recorded when it is earned, regardless of when it's collected. Expenses are recorded when they are incurred, regardless of when they're paid. For example, you're a December 31 provider. The services you provided in December, even if the payroll was in early January, the expense would still be in December. The revenue you receive, which might not be received until March, would be part of December, so it's part of that fiscal period. This is where you get in trouble. Sometimes if you're close to the 200,000, it puts you over. Now I said the cost report's a set of documents. It's not a standalone. Along with the cost report, you're going to provide them with your financial statements, which is a balance sheet, an income statement, and a working trial balance. Okay? Now they can be internal. They can be your own. They can be off your QuickBooks, again, as long as they are on accrual basis of accounting. However, if you have a CPA financial statement, be it audit reviewed or compiled, then you need to provide that or indicate that you'll make it available. Medicare does not require you to have a CPA financial statement. Medicare does require you to provide it or make it available if it exists. One of your questions on the 339 will ask that. Okay? And then you got to send along supporting schedules for reclasses and adjustments within the cost report. And of course you send along the CMS form 339, which is the provider cost reimbursement questionnaire. And you sign the cost report and you sign the 339. An officer of the agency. Could be CEO, CFO, the administrator, but it has to be an officer of the agency. It can't be the receptionist or the secretary. Now the 339 has many questions, many exhibits, and let's cut to the chase. There's only 6 sections that pertain to home health per CMS directive. You could ignore the rest of it. Now the 6 sections that pertain to Medicare home health, you slice and dice that further, you'll see that not all of them really relate to you. Section A, provider organization operation, just asks if there's been any change of ownership, address, is there home office, related party, general questions. Financial data and reports, there it pops up if you do a CPA financial statement. Approved education activities, I have not seen that in a home care setting since 1977, so that's probably going to all be NA. Medicare bad debts. Medicare says you have no bad debts since they pay properly and completely. Beds, no, you're not going to have any beds issues, a home health agency. And the PSNR data question is simply, are you using the PSNR, your own records, and Healthcare Synergy does a nice job of that, or a combination of the two? So that's simply what the parts of the 339 you have to fill out. Getting back to signature, however, you are testing that the information is correct and prepared in accordance with regulations. Prior to 2002, people went to jail for signing a false document as viewed by the government. And one of the charges, which I always thought was interesting, they also went to jail for postal fraud since they mailed the cost report to the Medicare, and that was one of the charges that got them hung up too. Because you're certifying that all the laws and regulations, the service were providing compliance with laws and regulations. And again, if you're in a Medicaid state, this is doubly important. I think this chart's interesting, and it does not relate to the cost report, but it's sort of rather complex flow. Sometimes I think this is how the cost report runs. Now, the first part of the cost report is Worksheet S, which is certification. Stuff like your name, your address, when were you Medicare certified. Then you go to S2, which is more general information. It will ask about depreciation, malpractice. The edits will generate from the cost report software. So for instance, it asks for how you pay your malpractice claims, which is a hangover from the 1980s and the hospital crisis. If you don't know for sure how much you're paying, just put $1 in to clear the edit. General information, again, continues. Depreciation, are you straight? Everybody in Medicare should be on straight line. Not be conforming to the proper Medicare schedule, but you should be on straight line. And we'll ask for your expense. Utilization statistics, we're looking there for your Medicare visits and patients and your other visits and patients. All your patient statistics will go here. Again, Healthcare Synergy has a nice report which kicks out the information. Worksheet A series is where it's also called a trial balance of expenses. It's where all the expenses will go. Now, the total expenses should agree with your financial statements. One of the questions on the 339 is the total expenses of cost report agree with financial statements. If they do not, you've got to provide an explanation, and a reconciliation is attachment to the 339. Worksheet B and B1. B is just the cost flow from A. I'm giving you the links to the forms. I'm not showing the forms because they're rather hard to read when they're small and due to time constraints. In the 90s, I did 3-day programs and felt I didn't have enough time, so pardon me for moving along. B1 is the statistics, and we're going to talk some about that. Worksheet C is, again, just the flow from A flows to B to flows to C. That's how it's apportionate to Medicare. Costs are, for the most part, apportioned to Medicare on visits, but before it gets there, we'll show you what happens in B1. And Worksheet D and D1 is where your PSNR inputs or your Healthcare Synergy report. And F is your financial statements, which should pretty well agree if your balance sheet and your income statement from the that you provide as part of the cost report package. Now, the big aspect of Worksheet S3, Part 1, we should mention, I will mention, is Medicare Advantage visits or other. They are not Medicare. Many providers think because they're a Medicare patient that they're counted with Medicare. They are not. They're considered other, because Medicare Advantage is tracking those patients, and they have to report those patients. You do not. You only report those Medicare patients that you treat fee-for-service and that you, in fact, bill for. The visits on the Part 1 are as provided. It doesn't matter if the visits provided during the year, they're counted Medicare and other. And unduplicated census count, Medicare and other, you count the patient as one. Home health aides, Medicare and other. Now, if you do not track your home health aides, the number that currently is not being used by CMS for much of anything, then you could either estimate that your typical home health aide's 1.5 hours, then just take 1.5 hours times the number of visits, or you could use 1 hour per one visit, which seems to be the industry standard fudge on a home health aide visit. There's definition of home care, Medicare eligibility. You only report billable visits. I'm going to leave that for your reading. I think by now everybody in here knows what is home care. Like-kind services. There are certain states that have a Medicaid program that they can get an exemption to like-kind services. That for you. Now, full-time equivalents. Here's an example where we were bad as an industry. In 1992, the CMS, then called HCFA, adjusted the wage index for home health based on the cost reports of 1991 and what they reported at full-time equivalents. Guess what happened? The numbers were so bad and so erratic that they scrubbed the idea and they went to the hospital cost reports to get the wage index for healthcare workers. So we do not have a wage index specific to home health agencies, even though we had the opportunity, because the cost report requires information. This is the same thing required of hospitals, putting full-time equivalents by department. Okay, now the Medicare calls full-time equivalent 40 hours a week, 52 weeks, so it's 2080. And you could estimate for contractors, again, based on number of visits, or use 1 hour per one visit if you're not tracking by discipline. But you still have to report the information, even though government currently is not using it. Here's a productivity number if you'd rather back into it based on productivity averages. Now, S3 Part 4 is where Medicare PSNR, or the Healthcare Synergy, information will come in. This is for episodes that close during the cost report period. So the visits of S3 Part 4 will not match the visits of S3 Part 1, because S3 Part 1 are visits provided during the year, and S3 Part 4 are visits that for episodes that close during the year. So in fact, if you have the same visits in both places, you've done something wrong. So the cost report tracks your statistics, your costs, your categories of cost, reclassifications, adjustment, and apportionment. This is the Worksheet A, trial balance of expenses, the 5 columns of main interest. So you see the buckets you're going to put them in is salaries, benefits, transportation, contracted services, and other costs, which gets to be quite a large bucket at times. Now your overhead cost centers are building, which is largely your rent, equipment, which could be depreciation, plant operation, which could be housekeeping, utilities, transportation, if you separate it from direct care services, and your administrative and cost. Your services, your direct patient care is what everything gets allocated to, which of course is the disciplines, the 6 disciplines, medical supplies, drugs if you do flu, and DME if you do DME. Now medical supplies, here again is an example where we shot ourselves in the foot. In 2008, Medicare, could someone mute their phone that's on a speakerphone? 2008, the Medicare gave us a new term, NRS, for non-routine supplies. I really don't know what the problem was of calling it billable supplies, but we now have NRS courtesy of CMS. And they established rates for non-routine supplies based on the 2003 cost reports. Guess what? CMS said agencies weren't billing for their medical supplies because the costs were either buried in administrative and general, or they in fact had a vendor that billed separately for supplies, which was what CMS thought. You don't see much of that. So next time you got shortchanged on your medical supplies, keep in mind the fact that you're not identifying NRS separate from routine. Too many agencies put it all in the same bucket. So your wound supplies, even though you identify them on the claim form, it's not being picked up right in the cost report. So government thinks you're not billing properly for supplies, and they don't really care because they're not going to pay you properly if you in fact have not identified them through the claims and through the cost report. There's a consolidated billing list if you want. Now there's our non-reimbursable cost centers. These are not Medicare covered services, and they have to be separately identified. Private duty, meaning non-intermittent services, homemaker, or shift work too, other services, come to mind on that. Telemedicine specifically is not a covered service for Medicare, as its own designated line. And if you have an HHA-based hospice, you will complete either the K or the O series. The O series are new for cost reports beginning on or after 10/1/2015. So for the moment, we don't have that issue. Now, you adjust the cost report to either remove non-allowable expenses, marketing comes to mind, or you could leave it as a cost center to set up administrative overhead cost. Again, the nature of the expense. Refunds, rebates are offset. Interest income against interest expense. If your expense is more than your income, you offset the income against the expense. The program's premise is expenses must be reasonable, prudent, related to patient care, and if there's no specific Medicare rule, we'll defer to generally accepted accounting principles. And there are some differences from IRS. I'm going to mention them, but not advocate that you conform. Allowable cost, of course, is medical supplies, director's fees, professional advisory group, all within reason, of course. You have a better chance of getting your medical director's fees not scrutinized if it's $25,000 a year than would be if it was $250,000 a year, unless you're quite a large organization. And there's a list. You can look at your leisure. Some that are non-allowable, gifts and donations. It's better to give than it is to receive. So home health agency, donations and gifts that you make are non-allowable costs and should be removed, as long with fines and penalties. Since you operate in a perfect system, you'll never have fines and penalties because Medicare assumes you're in a perfect world. And of course, anything related to competition, merger and acquisitions, goodwill, and the like. So there's a whole slew of them. And anybody has specifics, you can drop me an email or call. IRS has a different capitalization life than for Medicare. Medicare requires you to use the Medicare Hospital Association guideline to useful lives. The reality is no one is doing that. If you're a Texas provider and you participate in the CBA or PHC programs, then yes, you have a different capitalization policy. Certain of the Medicaid programs are going to require you to adjust your depreciation. Basic premise is with IRS, you can expense like $17,500 a year, Section 179, whereas for Medicare, the first $5,000, any item under $5,000 can be expensed. So there could be some difference. And of course, you could have a different threshold. We recommend using $5,000 as a threshold so you could expense as much as possible. Again, certain Medicaid, state, and certain programs have different requirements for that. And that's the definition. Reclasses just move costs between cost centers. For example, if you put all your medical supplies within administrative and general other expenses and you need to move some to non-routine supply line, you would do it by reclassification. Other income offsets, related organizations. Now, when I used to do my 3-day programs, I spent a half day just talking about related organization and home office cost statement. Neither of us have time for that today. The important part that I wish to stress to everybody is if you have a related organization, disclose it. CMS and the MAC could come to you for more information if they want, but they'll be a lot angrier, or angrier period, if you have a relationship and you haven't disclosed it. If you're buying medical supplies from your sister, disclose it. If you're renting a building from your dad, disclose it. If you own the building and the agency, but they're separate corporations, disclose it, because that's a related organization transaction. So worksheet A6, you just put the relationship, the expense that's involved, and the amount. Why I talk about how to make the adjustments to that amount here, and the control and the cost. The reality is at the point, again, modified somewhat depending on what Medicaid program you participate in, is at least disclose it. The MAC and CMS will at least acknowledge you've disclosed it and made an effort, and then they can determine if they need to make an adjustment or discuss with you if adjustment's needed. Because there's all the fine print on what you're supposed to be doing, and you may qualify for a 1010 exception. Again, anybody interested in that can contact me offline, email or phone call. Home office, if you're part of a Medicare home office, you will have a home office cost statement, Form 28705, which has to be filed with your cost report, and it has some advantages to that too. As far as I will say, the home office cost statement is not available under Freedom of Information Act, whereas all the cost reports are. Now B and B1 is the allocation. Here's where we come to the allocation statistics. All the costs of capital related, which is building, equipment, plant operation, are all allocated by square footage. Now I don't want you running around measuring the square footage for all the departments. The accepted means now has been simply to declare all your square footage belongs to administrative and general. So for example, if you have 2,850 square feet, you could either put 2,850 square feet all on the administrative and general line for that purpose, or 100, and that will both have the same effect. All the cost allocated by square footage will then go to administrative and general. You don't need to be measuring square feet by department. Transportation, mileage by cost center. Well, if you directly charge your mileage cost, which many agencies do, then that's fine. Or on the other hand, if you don't directly charge any of it, nor do you track your mileage, then it is an administrative and general cost, and all the transportation costs are allocated to administrative and general. By now, I think you got the idea that administrative and general is the big bucket. Administrative and general other costs have every cost that you can't classify in one of the disciplines or cost centers, and it also now has received the allocation from all the what would be called square footage cost and transportation if you don't identify it elsewhere. Administrative and general cost, thus, is the biggest component. It will be 40 to 60% of your total cost when said and done. And these costs are allocated simply on the cost relationship of these patient revenue departments. If your skilled nursing costs are $2 million and your home health aid costs are $1 million, your overhead cost of administrative and general will be twice as much for skilled nursing as it would be for home health aid. So that need but not be scientific. Now where it hurts, of course, if your skilled nursing costs are $2 million and your private duty non-skilled services are $2 million, then your overhead cost is split 50 to 50, and prior to PPS, this would be damaging because we all know overhead related to private duty is not as intensive as overhead related to Medicare. Then it flows to Worksheet C and gives you your average cost per visit, your cost of non-routine medical supplies. And again, in that aspect, neither of these matter. Medicare's reimbursement prospective payment system, but once again, we're talking about we're all in the same swimming pool. And then cost of drugs, which is your flu vaccine. Flu vaccine is still Medicare cost reimbursed, and if you do flu, which talks about there, and there, send me an email or give me a call. Again, in the interest of time, I'm not going to get specific for flu. Worksheet D, which would be imported, your PSNR imported, or to use your software, would give you all the information. When all said and done, the cost report should have no monies due to or from because you're reimbursed under prospective payment system. So if Worksheet S, at the very beginning, back at the beginning, if you show an amount there, and you're going to get an edit that says there should be an amount there, ignore that. If you owe money to Medicare, you have to send a check in with the cost report. In PPS, you shouldn't have that. If Medicare owes you money, they're not going to send you a check, so why have it? So if you see monies due to or from Medicare and you do not have flu, then you've made a mistake because it should be zero. Because Medicare, it's like separate departments. You file a cost report that shows you owe Medicare $10,000 because you made an error, they're going to want to collect the $10,000 first, and then it's going to take you a while to get the money back. Again, everything's on the accrual basis. Medicare can adjust the cost report. They're likely not to adjust the cost report today, except when you have flu vaccine. And please, of course, be signed up with EDIM to get your PSNR. Worksheet F will be the balance sheet. Should match your internal financial statements. Now, I gave you the links so you could get to the forms. There's the CMS link. So you guys should look at the forms and the instructions to the forms. The 339 is Chapter 11, and the 1728 is Chapter 32. Now, if you're going to use it for managed information, which we advocate, then you need to add back costs that are non-allowable. For instance, donations you've made, marketing expense. Problem we have with MedPAC, which says that home health agencies make too much money, 14% last year, is marketing not being allowed. It's not considered a cost of doing service. Now, Medicare Advantage plans have marketing, hospitals have marketing. In fact, the Medicare Advantage plans marketing is approved by CMS, so it's not a level playing field in that regard. But if you're going to use cost report for management information, simply add back, run a separate cost report, add back the cost of marketing, and you'll get such wonderful things as cost per episode, your true margin, profit by payer, average visits per episode, percent of episodes by type. CMS is doing data mining too. I mean, if I was one of those 1,000 agencies that had no loop episodes, I'd be a little concerned. And it will compute your cost per visit. There are total cost per visits on Worksheet C. However, your direct cost per visit you have to compute taking your Worksheet A cost divided by your visits on S3, and the indirect, of course, is the difference to come up with Worksheet C total. Now, the emphasis here is the calculation. Medicare pays well relative to private pay, relative to Medicare Advantage, relative to PPOs. You can make money on Medicare, and Medicare pays reasonably quickly. So that's why agencies are still doing okay, even though the rates continue to get squeezed down. You need to get operational efficiencies and more volume. Because when you factor in the others, which this diagram is trying to show, your margin goes down because of the other services. Some of the information you get from cost report is analyze the percentage. Again, administrative cost, I said earlier, most agencies run 40 to 60%. Obviously, if you can get that down, and I include all overhead, so in this case it would be 30% in the example shown, then the better off you are. You want your cost of goods sold to be a higher percentage than your overhead. Now, NOC has information which relates to cost reports. So you can, benchmarking a cost report can be wonderful. You want to benchmark against your past history. You want to benchmark against the nation. You want to benchmark against your state, doing the same thing CMS is going to be doing, because you pop out as an outlier, that's when you're going to get the RACs and the ZPICs and the CMS and the MACs to take a look at you. So you want to be aware of how you're doing relative to your neighbors, your peers, your colleagues, everything from visits per episode to the average reimbursement per episode. So every aspect of that. Now, some of the past cost report issues, the FTEs not being calculated correctly, visits not being counted correctly, cash versus accrual is probably #1 on the hip parade. Should ensure you file on an accrual basis. Technically, the cost reports could be rejected if the MAC sees that it was filed on a cash basis. It also causes a problem including them in the pool of cost to evaluate for rebasing. Costs being commingled. Many agencies still report their salaries in one bucket. Well, as a Medicare provider, you know you're providing 6 different disciplines, or can be providing 6 different disciplines. You need to have the salaries separated into 6 different disciplines. So there's the other aspects. Your expenses do need to agree to financials to show why. It's a myth to say that Medicare did not make any adjustments, because relative to other than flu vaccine, they are not making many adjustments. If you need a chart of accounts, because you do have too many things in one bucket, there's a link to obtain a chart of accounts. Now, this one has a little complexity to it and a little sophistication required. If you take a look at it and it's too complex for you, drop me an email or make a phone call, and I'll be glad to send you our Always Better Care chart of accounts, which is really designed for smaller agencies that are to be of assistance. But here's one provided by Knox Home Care and Hospice Financial Managers Association, and a link to it. Over time, I've written various articles, which are now called white papers. They're listed there, the current ones in stock. If you have interest in any of them, send an email to Kathy and she'll send you a free copy. The SBUD is referring to the financial requirements of surveyors. Surveyors are under a mistaken impression that your budget has to be prepared in accordance with generally accepted accounting principles. There is no budget in existence as a format per GAAP. And so why is Connolly here? Connolly's here because it's a recovery audit contractor for home health. Until they got the contract just a few months ago, RACs did not bother home health or hospice because RACs, recovery audit contractors, get a % of recovery. There was no money in home care when your average claim is $2,500, as there is an inpatient hospital claim where it could be $25,000, and they got anywhere from 9 to 14% of what they recovered. Well, CMS got annoyed at this because they believe RACs are also vital to home care and hospice, so they put it out to bid. Finally, because there was a lot of protest and arguing, they came out, and Connolly is now the RAC for home health. Now, the beauty of a RAC versus a ZPIC is a RAC publishes on their website what they're looking at. They have to get CMS approval. So if you want to know what they'll be looking at, it's on their website. Just click on and go look. They just gotten the green light, so they might not be very active. They're also supposed to hold provider education, so you should be looking for webinars or presentations as they explain what they're looking for. So a RAC at least tells you what they're looking for, they're coming at you, and they tell you they expect them, unlike a ZPIC who has a license to come anywhere, anytime, for any reason. So if you get a RAC, hire a clinical consultant. If you get a ZPIC, hire a lawyer. And there's my phone numbers and my email, and you have any questions about anything I covered or anything else. I will also be at CASA, the NOC Financial Conference, and the NOC Annual Conference. Feel free to drop by and talk to me about anything at any of those, or send me a call or an email. And I think we have a few minutes for some questions. Elaine, do we got any questions online?
Okay, I found this on the web for questions. Hi, Tom. Can you hear me?
Hi. Yes.
Okay. Well, one question. What cost report software do you recommend?
We recommend Health Financial Services out of Elk Grove, California. They pretty well dominate the industry. A lot of consultants and providers use them. They're user-friendly and relatively inexpensive. That would be the software we use, the software we recommend. Thank you.
Okay. How about past cost reports were filed on cash basis? Can that be continued, or should the past cost reports be corrected?
You needn't correct the past cost reports, again, unless your Medicaid program's involved, and you might want to check with them. Like I said, very few states are. Going forth, you need to be on the accrual basis, and that would be the recommendation I would make. So just conform going forth after this rather than try to fix the past. Thank you.
Okay. And how about community education or marketing? What is the difference?
That's somewhat interesting. Back in the prior to PPS, there was big arguments between providers who called everything community education and Medicare, which called everything marketing. I guess the intent would be to look at what's going on. You can do community education if it's designed to inform the community of a new service or to coordinate with SNFs and doctors' offices and hospitals, but it's expected to be somewhat reasonable in expense and approach. Obviously, if you're mailing out 50,000 brochures, that's marketing. If you're paying your people on basis of referral, that's marketing. If you're taking out big ads in newspapers and like, that's marketing. So look at what you're doing and look at the cost involved and make your best judgment call. Again, it's always going to be available to someone else to look at the same. Thank you.
Right. Okay. And are Medicaid cost reports the same as Medicare?
No, we got 54 Medicaid programs, and they're all different. And like I said, there's about 7 or 9 states where it's very important. Texas has a CBA and a PHC programs, which are not only cost reimbursed in part, but they also have little different rules to them. You got to take a special class to even prepare those cost reports. But for the vast majority, a lot of states don't require a cost report for Medicaid, like California, the Medi-Cal program. It's just fee for service, so you don't have to worry about that. So for the most part, it's just fee for service, but those states that have Medicaid cost reports, no two are alike, and they are different from Medicare. Thank you.
I see. Okay, I think that's about it.
Okay. Again, I thank Healthcare Synergy for hosting this, and my phone numbers are there, or send me an email. I'm glad to answer questions, or drop by and say hello to me at most any conference.